Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it was a fairly range-bound day with the Nifty ending just around that 22,200 mark. Although at one point, we were looking at reclaiming that 22,300 mark, but we missed that by a whisker. And we slipped back to around 22,200 levels, which is where we've ended today. But broader markets continue to shine. The mid-cap index was up somewhere around 1% or thereabouts. Small cap index also gaining 0.8%. India VIX yesterday it did cool off a bit, and today as well eased just a little bit to end around that 20 mark. Breadth was of course in favor of gainers, and NSE advanced decline ratio was almost in the almost at 2:1 today. So breadth was good and broader markets were doing well. Sectorally, PSU banks, they were the top sectoral movers. Aside of that, you had realty and metals, they were also doing well. But what didn't do well today was the FMCG pack. Autos, after yesterday's outperformance, once again saw some bit of profit taking, and private banks, they were also among the losers today. Individually, PSUs are doing well today. Coal India, Power Grid among gainers, even BPCL for that matter. And Cipla, after the block deal in which promoters sold stake, we saw a good 4 to 5% up move coming in there. Airtel also among gainers. Of course there was strength in the India business, and which is where investors were focusing in, because Africa business was a tad disappointing. M&M ahead of numbers among top gainers, and so was UPL. Of course, management outlook was fairly good. Yesterday it came under a fair bit of profit taking, but today it has managed to stage a good comeback. Among the losers, Eicher Motors, Asian Paints, Tata Motors, Bajaj Auto. So some of these auto names among the laggards, and so was HDFC Bank. If you look at some of the other movers on the Nifty 500 index, you had the likes of Hitachi, ITI, Thermax, Siemens. Of course, Siemens numbers were pretty good, and stock reacting to that, up 6 to 7%. Timken India was the other one that was doing well. What didn't do well was Colgate. Of course, there was some commentary coming in from the management wherein they've said that margins may have topped out. Stock clearly reacting to that among top Nifty 500 losers, and so was Jyoti Labs. That was also among the losers. Aarti Industries, Archean Chemicals, Jindal Stainless was among some of the other losers on the Nifty 500 index. But of course, to take stock of where the markets are headed from here, what the charts are saying, I'm joined by Ajit Mishra of Religare Broking. Great to have you on the show, Ajit. We almost managed to reclaim that 22,300 mark, which also happens to be that 50 DMA mark on the Nifty, right? Here on today, some bit of cool off happening around that 22,200 mark. Do you think we are poised for some bit of upside from here, or do you think we are will continue to be a little range bound later in the week?
Yeah, Nandita. So yes, it's a breather after 3 days of advance, and especially after testing the strong support at 21,800 in the previous sessions. So the good part is that we are still holding gains. So today it was more of a lackluster session. So we didn't see much on the downside either, though the upside was capped. 22,300 is a strong hurdle. Until we decisively reclaim that mark, I doubt that there will be any meaningful recovery. But downside, it also seems capped, considering that banking, select stock in the energy basket, they are also showing strength. So today, again, SDFC was slightly in the back foot. The main reason why we are seeing this, negative closing, because select index majors like TCS, Reliance, and SDFC, they were slightly in the back foot. But overall, apart from defensives, we are seeing select participation from the other sectors also. So I feel that's going to be more of a range-bound session, but outrightly bullish is something also that I would recommend to avoid until we strongly close about 22,300 mark, 350 mark, for a day or two at least.
Right, for the Nifty Bank Index as well, I think 48,000 is the level that we are watching out for, right? And it has eluded the Nifty Bank Index so far. We've been making an attempt to reclaim that level, but that's not been happening. As you mentioned, HDFC Bank is one of the big laggards, and that may be preventing the Nifty Bank Index from reclaiming that level. But on the upside, would you say that a level below 48,000 is something that you look at for the coming sessions?
So yes, it's a 1,000 point range that we are currently eyeing in banking index, 1,100 points, close to around 46,900 on the lower side and 48,100 on the higher side. It's broadly that we have been seeing the index trading in. See, the challenging part is that only Axis and ICICI among the private banking majors and SBI from the PSU pack. The top three are showing strength or resilience when the markets are turning wobbly and we witness profit taking. But the rest of these stocks, especially IndusInd Bank, Kotak, HDFC, they are not seeing like sustained participation, especially in the recent turns. So until we see at least couple of more names on the advancing side, on sustaining side, especially from the private banking majors, I doubt that there will be any meaningful recovery in banking space as well. So we suggest staying with the top names like Axis and ICICI if somebody is playing or prefer to play the banking rebound, then Axis and ICICI. Apart from that, SBI from the PSU pack and Federal Bank. These are some of the names which one can look at.
Right. I want to bring your attention to the entire capital goods universe, right? The industrials, so to say, the likes of ABB India. Siemens today, of course, reported a good set of numbers, big beat on profit, and of course, there's the whole demerger of its energy business into a separate listed unit. So here on, of course, Siemens today hit a fresh 52-week high, and in the last 5 sessions itself, it has given double-digit returns already. Would you say that the charts are looking a little stretched or overbought at the current juncture, or would you see more upside from here?
See, the good part is that every passing day when we are seeing the stock Siemens and ABB inching higher, volumes are increasing. So that is something which shows that we have new entrants and strong hands are still continue to look at as a buying opportunity. But today, after this gap up, in Siemens and positive close in the ABB, I feel that there could be a bit of a breather or a consolidation because, as you rightly mentioned, then 5,400 to 7,200 in last 1 or 2 weeks. It's kind of move is very difficult to sustain the kind of momentum. So it's prudent that if you're planning any fresh trade, one should wait. And any dip toward, let's say, 66, 6,800 zone, then only one should look for buying or accumulation in Siemens. And for ABB, I feel a zone could be closer to around 76 to 7,800 mark.
Another one that saw an 8% uptick in today's session was Thermax. Of course, it has been added in the MSCI India index. Reacting to that, here as well, would you expect some bit of a cool off?
In fact, Thermax, we have seen a fresh breakout because the stock was hovering in a band for almost a month now. 4,700, 47, 80 on the higher side and 4,400 on the lower side was largely the band. Today, the kind of volumes and the price action, though at the higher levels we saw some profit taking also. It seems like that this positive momentum is here to stay, and we may see much higher levels, maybe close to around 5,350, 5,400 in near future. So yes, you can continue to hold your. It's a high beta counter. We would suggest for fresh buying at least one should wait, or one can accumulate in the range of 5,000 to 5,100. With stop at 4,800 and 5,400 being the positional target.
All right, that's the view then. But M&M, numbers are coming out tomorrow. Stock is already at a fresh record high. On a YTD basis, we've seen gains in excess of 30%. Expectations, revenues are seen higher by 6.5%, but profit may drop. And operating margins also seen lower on a YY basis. It's a tractor segment that is likely to be under pressure. And of course, volumes were down 20% on a YY basis in the quarter gone by for M&M's tractor segment. And because of the inferior segmental mix, we could see margins coming under pressure. But already at record levels and then 30% uptake, would you advise taking some profits at these levels?
Certainly yes, because though among the top performing sector right now we have auto, FMCG, wherein we are seeing consistent buying, and M&M is definitely leading from the front within the auto majors. But as you rightly mentioned, that all largely the positives are already discounted in the price, and the stock is already at the record highs. there could be a bit of a profit taking possibility post numbers. So I would suggest at least book partial profit, if you have bought it at the lower levels, and maintain a trailing stop loss also for your existing position at 2240. And if it manages to hold above this zone, then probably we might see the stock inching towards 2450, 2500 in the coming weeks.
Two stocks from the healthcare sector that I want your opinion on. One is Cipla. Of course, we saw promoters stake sale happening, 2.5% stake sale via a block deal, but the stock is up somewhere around 12% or thereabouts on a YTD basis. Day before yesterday it was up 6%, or it was a top Nifty gainer. Yesterday again it came under selling pressure, and today of course we saw a rebound coming in. So some bit of volatility coming in there. But your thoughts on where the stock is headed?
Honestly, I'll not be touching the stock for a time being now, considering the kind of choppy swings that we have been observing in the stock in the last 2 weeks. I feel that the prudent strategy is to wait and let the stock surpass this previous swing high close to around 1430, 1440 levels. And then once we see some sustainability, then look for buying position with 1400 being the stop. And for a newer target, maybe around 1500 plus. So yes, I'll be looking for buying opportunity, but conditionally, once we cross this 1430 levels decisively.
Vijaya Diagnostics, this stock has been consistently hitting 52-week highs, right? Would you see more upside here, or would you say that there could be some bit of selling around the corner now?
So the good part about this stock is that was after reclaiming its record high, it spent almost nearly 3-4 months around that area, and finally we are seeing this move, exponential move in the stock in the last 4-5 days. So I feel that the accumulation, post accumulation, we generally see these kind of price volatile swings, positive swings. And there could be further upside. So if somebody is looking for fresh trade position, the stop loss could be deeper, considering that we have already seen a very sharp move. So close to around 760 is something that one can maintain a stop, and they can continue to hold for, let's say, 950 to 1000 as a positional target.
All right. Talking about Vodafone now, Vodafone Idea. If you look at the last 5-day chart, hasn't really done much. It has been sideways, but off late I've been reading some brokerage reports where the bull case scenario is placed at 25 rupees, which is like literally doubling of the stock. Are the charts suggesting any such moves, or do you think it is likely to remain sideways or flattish going forward?
See, for the traders, I feel that until we close above, let's say 15.5, 16 levels on a week-on-week basis, then only we can see some bit of fresh, traction, which can help the stock to make a new high, maybe close to around 2021. Otherwise, this lackluster move would continue with the lower band around 11. So as of now, indications are in the favor that the downside seems capped, but upside also until we decisively cross and sustain above 15.5, 16, one should not look for short-term trading opportunities at least.
Right. Let's take a look at the tire stocks also, Ajit. Apollo Tyres, JK Tyres, CEAT, MRF. If you look at all these charts on a YTD basis, they haven't really done all that well. On one hand, you've auto stocks that that have been outperforming, right? But tire stocks have taken a break. So to say, for the year-to-date returns, they haven't been all that great, right? So are you spotting some bit of a weakness there on these charts, Apollo, JK, CEAT, anything that's catching your attention?
So weakness, I definitely feel that they're a bit of a underperformance for sure, because we have had a very sharp swing in crude of late, and post that the attempt of recovery in most of the tire names, they fizzled out, especially Apollo and JK Tires. So Apollo, after retesting the previous swing high around 520, has retraced again to the 460 area. So I feel yes, until we see some sustainability above, let's say 480 mark or 485 mark rather in Apollo Tires, this sideways tone might continue. And for JK Tires, we need a close above 420. So for a time being, yes, It's not outrightly bearish, but yes, the underperformance might continue in the tire space is what charts are indicating.
Another one that's catching my attention today is LIC, 6% up. It has got 3 more years to meet public shareholding norms. Clearly reacting to that, for the last 1 month the stock has been sideways, but would you say that the kind of move that we saw today is just the start of another big up move here? Could it retain or reclaim levels of 1000 and stay above that?
So certainly yes, because the last 2 days we have seen a very sharp uptick in the volumes with price action, and we are very close to that mark of 1010, 1020 area, where we've tested thrice in the recent past and but failed to cross. So once we manage to cross this zone, then definitely the stock may inch towards the previous record highs around 1100, 1150 zone. But for fresh buying, I would rather prefer to wait and see, because we are very closer to the resistance zone around 1110, 1120. So let it surpass that zone, then only one should look for a fresh trading position. And if you have any existing trade, you should maintain a stop at 975.
All right, 975 stop needs to be maintained when it comes to an LIC. But power finance companies, PFC and REC, anything between the two, which one would you prefer? Because these stocks were hitting fresh 52-week highs, but then there was this whole RBI's draft norms, on project financing that came as a setback. But since then, the stocks have stabilized a bit, and the companies have already said that it will not have any impact on profitability. So between a PFC and REC, would you prefer PFC, or would you say that both of them are ripe for another leg of up move?
So I would prefer PFC, among these two, considering that my risk reward is more favorable in PFC at current levels, because the stock is still, trading around the short-term averages. So that's the area basically where we had the last breakout. So I have this cushion that I have multiple supports around this 425, 420 zone. So keeping that in mind, and plus, as you rightly mentioned, that the negativity post the news seems like over now, and we are seeing stock also witnessing uptake with volumes. So one can look at PFC to accumulate current levels, with 420 being the stop, and gradually we can inch towards the previous highs close to around 665, 680 area in a week or two.
All right, that's the view then. Of course, risk reward looking better for a PFC. But Jyoti Labs, that's another stock that's in focus. Reported numbers today, but it seems margins, in terms of margin performance, things may have topped out for the company. But would you say the risk reward is looking attractive for a Jyoti Labs as well, or would you look at some other stocks like Marico, Dabur, etc.? Because now FMCG stocks have come back in demand, right? Post the kind of commentary that we got to hear from the mid-cap rural focused names like Dabur and Marico, so to say. So would you prefer those stocks, or would you still look at a Jyoti Labs right now?
So for a short term, definitely I would look at Marico. I would prefer Marico, considering the stock have made a new record high after almost 3 years of consolidation. And Jyoti, I would recommend continuing if your view is say medium to long term, considering that after this phenomenal surge from 150 to 550. We have been seeing this consolidation going on, though the momentum is missing, and we are seeing profit taking emerging at the higher levels around 480, 85 zone. But the trend has not turned negative yet, so there could be a next leg of the up move. But for the very short term, I feel that yes, the other counters like Marico has better potential to do well, and for Marico, I feel that this zone, close to around 475 to 480 is a good area to accumulate, and with stop at 565 and 625 to 630 should be a positional target. As a disclaimer, we have recommended this to our client as well.
The other stock that I want to discuss is PVR Inox. Stuck in a downtrend, no recovery, so to say. But would you say that the charts are now looking oversold here? Any strategies here, PVR?
So in fact, among the consistent underperformers rather, within the F&O basket, PVR, Bandhan Bank, UPL, Z Limited, So these are the consistent name from the last several months now. So in fact we have had this rebound in PVR from 1250 to around 14 mark. But couldn't hold those levels, and again we are seeing the stock is drifting towards the 52-week low zone. So indications are in the favor that it might continue to underperform. So if you have any existing position, maintain a strict stop at 1240 and use any recovery towards 1350, 1340 zone to exit your longs, because this underperformance is likely to continue is what charts are pointing towards.
All right, underperformance likely to continue for a PVR. But with that, before I let you go, Ajit, what would you like to recommend for our viewers with a 1 to 2 week time horizon?
See, I feel OMCs, they have formed a fresh base, especially BPCL. There was hardly any reaction to the uptick in the crude oil prices, rising crude oil prices also. Though there was days of consolidation, and I feel that it is over now. Today, we have ended almost around the day's high. So I feel BPCL could be a good bet to look at, with 605 being the stop and 660 as a target area. And apart from that, PFC, like we discussed during the show also, is a good candidate to accumulate, with stop at 605, 405 and 460, 65 being the position target.
All right, BPCL and PFC stock recommendations from Ajit. With that, Ajit, thanks a lot for taking our time and joining in this afternoon. It was a pleasure interacting with you. Hope to touch base with you sometime soon on our morning show as well.
Sure.
Well, with that, we've come to the end of this edition of Closing Bell. Of course, it was a fairly range-bound session, but we did manage to defend that 22,200 mark. Just about managed to do so. And, of course, 22,300, as even Ajit was pointing out, would be a crucial level to watch out for, given the fact that it also happens to be the 50 DMA mark, which the Nifty will be aiming to conquer sometime soon. But completely timed out here. Of course, it's a goodbye from me. Come back and join us tomorrow morning on Opening Bell at 9 a.m. tomorrow. Till then, have a great evening and rest up and stay tuned to Moneycontrol for all your other news and updates.